Hey everybody, welcome back. It's your boy Wayne here to get you an update on the two stocks that I'm currently running the wheel strategy on. Guess what? By the end of today's video, I'm going to go ahead and talk about the third stock that I'm going to be adding to my overall wheel strategy. But let's go ahead and get you updates on Celsius and Amazon. Take a look here. I've always said this, that the strike price kind of reflects the momentum of what the stock price has been doing. And with Celsius, the week of the 13th, guys, I was only able to earn $40 in gross premium. And in fact, when I bought to close here on the 16th, I only made $35 for the entire week that finished out on the 17th. If we look here at the following week that expired on the 24th, again, choosing a $93 strike price, I was only able to generate $65. I bought to close that for $15, thus making $50 for this week. It's kind of reflected here in the chart. If we look at the last month, let's go back here to the 13th. If I find March 13th on this chart, it kind of makes sense, right? Celsius went as low as $81 that particular day. So the further you are away from your desired strike price, the less in premium that you're going to earn. But I think for me, what I am glad that I did stick to was not going below my cost basis. And my cost basis is $9,300. That's 100 shares times $93 a piece. And so far, I have been able to continuously generate premium. It just hasn't been as much these past 2 weeks. But look at this. Today, on the 23rd, I was able to write a covered call that expires next Friday, the 31st, and I was able to generate $130, much more than the previous 3 weeks. Why is that? Well, we go back to the chart here, and if we look at the last week, Celsius had a pretty good jump from $83 all the way up to $86. We went as high as what, $89. And if we look at today, I think things went as high as $90. So we're starting to get back up into the 90s range. And that's a good thing for me. Would I have liked to have gotten Celsius 100 shares for what, $81? We saw it go as low. Yeah, absolutely. It doesn't always work out that way. But here we have it. Celsius so far has earned me $1,515. If we take, right, 1515 and we divide that by 2 months, remember I began this endeavor on January 26th. This week will obviously be March 26th. That's 2 months. So if we take 1515, divide that by 2 months, that's an average of about 750 bucks a week. I'm sorry, a month. If we go ahead and multiply that by 12 months, again, this is very much me being optimistic, but $9,000, potentially I could make if I, continue to see Celsius do what it's been doing. Remember though, everything hasn't been right. $280, $260, $245. You're going to have weeks like this. But I have been able to remain patient, and there are some days where maybe the stock just sits and I don't have a contract. But for the most part, every week I've been able to write at least one covered call on the 100 shares that I currently own. So I'm excited. $1,500. That's where we're at 2 months in. Let's get you an update on Amazon. And what's interesting is that there is an update on Amazon. So take a look here. For the last 3 months, Amazon has slowly been going back up. We're about, 20% in the last 3 months. If we look at the last month, once again, Amazon has been going up nearly 5.5%. For the last week, things are relatively flat. So where we last left off on, and I know what you're going to think, like, wait a minute, Wayne. I see an entry on line item 5. What is this you speak of? Hear me out on this. I consider the wheel strategy to be a chess game, not checkers, a chess game. And what I did today, I think, was make a good chess move. You'll have to let me know down in the comments if you want to offer your opinion on whether or not this is a good decision or a bad decision. But essentially what happened on March 8th is I was able to roll my cash secured put on Amazon all the way down from 104 down to 101. But in doing so, in order to continuously generate net positive premium, I had to choose a much further out expiration. So back on March 8th, I was able to get a 101 strike price, but that meant that essentially this contract would not expire until April 14th. So as the share price of Amazon has been going up, I made a decision, why not, buy to close early versus waiting till April 14th. And so I did that. Today, I bought to close this contract for $415. And what that means is, let's go ahead and delete line item 6. When I bought to close this contract for $415, that means I wiped away all of the profits that I had earned up until today. And in fact, I am now $263 in the hole. So not only do I not have any sort of net positive premium for this last transaction, but actually I took a loss on the overall strategy. But hear me out on this, because if I had waited until April 14th, I'm relatively positive that I would have left money on the table. So on today's date, I bought to close this contract for $415, but I immediately opened up another cash secured put contract. So on today's date, I was able to choose a strike price of $98. And this contract actually expires tomorrow. So for just 1 day of work, I am potentially going to make $60. Now take a look here, because you might say, well, now Wayne, yeah, you made $60. You're still $200 in the hole. But you have to also look at the collateral. Things started off with the wheel strategy where I had a collateral of $10,400. Now I have freed up, $600 in my cash. And now my strike price is down to $98. And so if this gets assigned to me, obviously I'm much more comfortable owning 100 shares at $98 versus $101. I mean, listen, I wish I owned this when it was $91. But that's the way it goes. And so what I want to put out for myself is a challenge, because you might argue, yeah, Wayne, this is a pretty risky move. You were essentially down $260 by buying to close early. You could have just waited until April 14th. And in fact, Wayne, isn't it you that says you should remain patient? Yes, guilty as charged. I do not necessarily practice what I preach. I am guilty of that. But what I am confident of, or at least it's a challenge, is between now, which is March 23rd, and April 14th, which was the old expiration date, I am going to see if I can make more than $415. Already today, I've made $60. If I can make more than $415 between now and April 14th, I think I will be able to say, yes, I initially had a loss on the wheel strategy for Amazon, but it was a smart move. It's a smart stock to run the wheel on, and hopefully this negative number turns into a positive number in what I would imagine is a few weeks. I'm hoping it'll be a lot sooner than April 14th, 2023. So currently today, Amazon finished out, take a look here, $98.84. It is trading after hours. Again, I have a strike price very close, $98. And so here's the deal. Even if Amazon goes even lower than $98 tomorrow, I go right back to the fundamentals. I could always roll close that position. I could always say, all right, let me go ahead and push it out to 97, 96, 95. And the fact of the matter is, because I was able to get back in at a lower strike price, $98 versus $101, I'm hopefully going to be able to get, one, a better strike price, and two, be able to generate net positive premium. So there, if you will, kind of a bigger update, if you will, on Amazon, because when I talked to you last week, I kind of thought this was going to be sitting there for a while, and today I decided to make a move. So before we get you the last update, which is the third stock that I am going to be running the wheel on, let's go ahead and get you a total on how much I've earned with Celsius and Amazon up until today. And if we now factor in the $1,515 on Celsius, we have to subtract the loss that I currently have on Amazon, which is negative $203. That means I am up $1,300 despite this current negative number. So that's $1,300 in profit, money sitting in my brokerage account which is a perfect segue to talk about what stock that I am going to be running the wheel strategy on, and that is going to be SoFi. SoFi is a stock that I jumped in today, and it actually kind of came up here at the last minute. I have been watching other content creators who have been running the wheel on SoFi. I had purchased SoFi, I think it was like last year, just a couple of shares, and just didn't like it, and I got out. And I'm glad I did, because what little shares I owned, I was able to make a profit. Let's go ahead and take a look here at the chart on SoFi. And for the last year, things are not looking good. They are down nearly 40%. However, in the last month, they are also down about 8%. But this is what kind of got me thinking, like, maybe this is going to be a good, cheaper stock to run the wheel strategy on. Take a look here. The current share price is $5.85. Now, normally, I would kick things off by selling a cash secured put. And this 52-week low number kind of made me think to myself, you know what, rather than starting off with a cash secured put, it's so close to that 52-week low, and I obviously had the money. And if we go down here to my history, where are we at? You'll see here, earlier today, I submitted a limit buy. So I ordered 100 shares, and I was able to have that order filled at $5.74 per share. So that is my cost basis. And if we go to the spreadsheet here, I've got it noted right here, right? Purchased 100 shares on March 23rd, and it's at $5.74 a share. Immediately after making that purchase, I turned right around and I wrote my first covered call. Now, one thing I want to point out about SoFi, take a look here at the share price of SoFi. It's $5. Take a look here at the share price of $98. Take a look here at Celsius, $93. And so, of course, the premiums are going to be significantly less if we're comparing, right, Celsius and Amazon to SoFi. I'm looking at, I only had to part ways with $574. And I'm hoping to generate consistent premium week after week. Maybe I'll even be able to write multiple contracts in a week like I have been able to with Celsius. You'll have to stay tuned on that. Let's go ahead and fix this outcome because I was not assigned on this. This is a brand new spreadsheet that I just added. And again, March 20, I'm a hot mess. I need to go ahead and update this as well. March 23rd, I wrote a covered call on SoFi, a strike price of $6, and I earned $13 in premium, which means if by next week SoFi goes up to $6, then those 100 shares would be called away from me. But again, I go back to where we're at on this 52-week range. If those shares get called away, I think I would jump back in by writing a cash secured put that time. And so I'm very, I don't know, I'm kind of excited. I realize some of you might say, well, Wayne, this is not a quality stock. I'm not going to preach to you that it is, but I do like the amount of volume that I am seeing in the options chain. I like that I was able to get in below, right, $5.75 a share. So you guys will have to stay tuned. Let me know in the comments, have you guys ever picked up any shares of SoFi? Are you running the wheel strategy on anything at this price range? And let me know your thoughts on what you guys think of this new edition altogether. You guys are fantastic as always. Thanks for letting me push out these updates. Hopefully you guys are liking, and if you are, give it a thumbs up. Make sure you're subscribing, and I'll see you on the next one. Thanks so much.